I'm here to announce the completion of our withdrawal from Afghanistan and the end of the military mission to evacuate American citizens.
A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy.
There is an enormous amount of international leverage that we will continue to work in a coordinated way with our partners around the world.
The military mission is over. A new diplomatic mission has begun.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 31st of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. ends its 20-year military presence in Afghanistan with its final flight out of Kabul early this morning, bringing a close to the country's longest war. China's recovery slows, services slide in back-to-back months for the first time since February 2020. Beijing widens its crackdown to private equity firms. And EU travel curbs. The bloc recommends new restrictions on U.S. travelers in another blow to the tourism industry, but will individual nations choose to enforce them? So let's get straight to our top story this Tuesday. The U.S. has officially ended its military presence in Afghanistan. The final flight out of Kabul ends America's longest war, despite pressure on President Biden from allies to delay the pullout. Well, here's what U.S. Secretary of State Antony Blinken said.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
Well, let's bring in Bloomberg opinion columnist Bobby Ghosh, who's had some fantastic piece explaining the real intricacies of what's going on in Afghanistan. Bobby, thank you for joining us today. We say after 20 years, the war, that the U.S. is no longer involved in this war. Can it really stay away, given what we could see come out of Afghanistan?
No, I don't think it can. I think the U.S., one phase of the U.S. war in Afghanistan is over, but the larger war on terror, of which Afghanistan was a very large part, continues. And we've heard from administration officials in the United States that they intend to continue to fight that war in Afghanistan, but do it from a safe distance. We keep hearing the expression over the horizon. And that's a very difficult war to conduct, as we've already experienced a drone strike that was meant to be against an ISIS target. It looks like might have killed a large number of Afghan civilians. We've seen that happen before, and I fear we'll see a lot more of that happen going forward. When you try to fight a war without actual reliable eyes on the ground, when you try to fight it from over the horizon, the scope for mistakes is much, much greater. And each of these mistakes then provides fuel for your enemies.
Bobby, I've heard everything over the last 2 weeks that actually the Taliban want international acceptance, that they don't care about international acceptance, that they don't need the money, that they do need the money, that actually they'll be more moderate, and they won't be. When do we find out what exactly the Taliban are?
Well, we don't find out until they choose for us to find out. I think we look at what they've done in their past. We look at what they've done very recently. Remember, large parts of Afghanistan remained under their control, have been under their control for the last several years. So there is a history that we can look at if we want clues to what they will behave like going forward. Yes, they say they want international recognition, but they want it on their own terms. It's not clear what they're willing to give up from their very maximalist demands in order to get that international recognition. And then once they've got it, if they get it, whether they'll stick to their side of the bargain. The history does not give much room for optimism. They have made commitments, and they have failed to keep up those commitments over and over in the past.
It's also unclear to me whether ISIS-K are sworn enemies of the Taliban, or actually whether they can work together to fight the U.S.
Well, they are and they're not. I mean, the U.S. is taking the view that our enemy's enemy is somebody we can do business with. But if that is true, if that logic holds true, then the Taliban and ISIS may equally feel the same thing about the United States. The fact is that, yes, at the leadership level, it looks like for the moment that ISIS and the Taliban are enemies. But you have to remember that at mid-level commander level, at the level of foot soldiers, these are people who are recruited from the same pool of, in fact, quite a lot of ISIS fighters came from the Taliban. They are brothers in arms. They are actually, in many cases, literally brothers, people from the same family. So it's not quite so clear that they are enemies, and if they are enemies, that this enmity will remain forever. The Taliban, again, in the past, once they acquired power in Kabul, have shown themselves capable of making deals with people that previously were regarded as enemies. I wouldn't rule them out doing the same thing. And by the way, in all of this conversation, what about Al-Qaeda? You know, Al-Qaeda is still very much there. We've seen videos of Al-Qaeda leaders returning to Afghanistan, being received with ceremony by the Taliban leadership. We shouldn't forget that.
We absolutely shouldn't. Bobby, thank you so much for all of your insight. Bloomberg opinion columnist Bobby Ghosh. Now, let's turn to Europe, and EU countries have also voted to impose fresh restrictions on non-essential travel from the U.S. amid a surge in coronavirus cases. The curbs had been lifted in June, with the reintroduction most likely to affect unvaccinated Americans. Well, joining us now is Bloomberg's Ben Sill, who leads our European government coverage. Ben, so great to see you in London. So what exactly are the new EU travel rules?
So what we got yesterday was a recommendation from the EU to reimpose restrictions on people arriving from the US. It's now up to the member states to decide how they want to actually interpret that. They're under a degree of pressure, though. They have kind of signed up to the framework under which these recommendations were adjusted yesterday, and they also are trying to move together so that the Schengen travel area, the free travel within the EU, is able to be protected, and they don't end up with a patchwork of different regulations in different countries.
So I don't know when all of this comes into force. We have to wait for individual countries to decide exactly what they want to do, Ben. But what does it mean for a U.S. resident who wants to travel to the EU?
Yeah, there's no particular timeline. Actually, we're waiting for the individual countries to let us know what they plan. For Italy, for example, sounds like they're not planning to do a dramatic increase. I think there are two particular things to watch. One is quarantines. What this recommendation does is open the door to imposing quarantine on people arriving in the US, which I think is the key issue, which would really deter travellers. And the other thing is vaccinated people. Member states have the right to waive the restrictions for people who've been fully vaccinated. And I think certainly in the tourist countries around the Med, that's something that they're likely to cling on to.
Ben, thank you so much. Ben Sills there with the very latest, of course, on this EU travel. Now, up next, China delivers a PMI shocker, adding to concern over the health of the global recovery. We discuss that and much more with Saxo Bank's Christine Jacobson. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the markets with Ritika Gupta. Ritika, another record for U.S. indices yesterday. What does it look like today?
Yeah, Francine, it's just like another day, another record high, and we continue on those gains. It's like there's no deterring this market. We sit now above that 4,500 level. Of course, this is the end of the month. It could be a bit choppy as we see some rebalancing here, but it really is tech outperforming. The Nasdaq 100 also reaching another record high. This as we see the likes of Apple reaching another record high yesterday, $2.5 trillion market cap. So that really giving a boost to the indices. We know Apple and Microsoft making up about 12% of the S&P 500 alone. A lot of this could come from the yield story. We see that 10-year about 1.27%. So we know your lower yields are good for tech with that lower discount rate kicking in. And I also want to talk about some metals here. Aluminum, the highest prices in 10 years. We're seeing supply constraints as demand really intensifies for that metal. So we see the likes of Goldman Sachs upping their price targets on the like of aluminum and nickel, Francine.
Ritika, a lot of optimism out there. Still reasons to be bearish when you look at those China PMI's data in general.
Yes, certainly, Francine. We do have reasons to be bearish, and one of those is that Chinese data, that PMI. We're starting to see the Delta variant again start to show up in the data. So the manufacturing PMIs slowing to 50.1 from 50.4 in July. But it was really the services PMIs that stood out here. Those contracting for the first time, going all the way back to February of last year. So a contraction here. And the question is whether this is just going to be a short-term snag or it's going to be somewhat of a sustained slowdown here. But it does give policymakers some more room. There are chatter about an ease in those reserves for some lenders and also more fiscal spending from the government in the second half of the year, Francine.
Ritika, thanks so much. Ritika Gupta there with some of what you need to watch in the markets today. Now, joining us now, Christine Jacobson. He's Chief Investment Officer at Saxo Bank. Christine, I mean, there is so much optimism out there. I feel like every day we talk about a new record on Wall Street. What would make it correct it?
Inflation, and reflation is everywhere to see. Electricity prices in Europe reaching all-time highs, gas prices all-time high, aluminium prices, as you just stated, all-time high. CO2 emission all-time high. But the narrative in the market is that they want to believe what the Federal Reserve and other central banks are saying, that this may not be transitory, but it's certainly temporary. So in that respect, the market continues to see only the upside here.
But, Christine, do you think this inflation is temporary? I mean, we had a speech by Jay Powell that basically said, yes, they're ready to taper. A taper does not mean they'll hike. What does it mean for your portfolio construction?
It's absolutely not temporary. It's an elevated level, and I think what is driving the market overall, both from a policy perspective in the ability to afford all of these fiscal expansion that we see and the green. We need negative real rates, but in terms of how you get negative real rates, you can have them two ways. You can have a relatively low growth with a slightly higher inflation, or as I expect it to be, a very high level of inflation, something like 4 to 5%. Overall, that then needs to be met by a higher significant interest rate to mitigate that. So I think right now the Federal Reserve is doing a big policy mistake in the sense that they, like everybody else, have no experience in actually managing an inflationary environment. And if we look at just on the equity side as well, Francine, we can now see that green transformation and commodities again starting to restart the engine and moving significantly higher. And to me, that means that reflation trade is just around the corner as we come out of this summer. And of course, as we deal with the different strains of the COVID.
Christine, but if you're expecting a protracted inflation, is there a danger that actually we have a policy mistake, or is there a danger that we see a rate hike, maybe from the Fed, pushed after small open economies have to raise rates because of the very nature of what they're dealing with the markets not being telegraphed?
Absolutely, and I think you're pointing to something which is really important. We have an asynchronic central bank policy around the world right now. We have a number of central banks either already started in the case of a lot of emerging markets. We have some of the small open economies, as you state, that is very, very willing and able to move. And then you have the U.S., who very much sits in a corner and don't want to do anything because they still have this dogmatic view that full employment needs to be in place. But you have to remember that the labor market in the U.S. and the overall economy in the U.S. is already reacting and creating numbers in terms of inflation on job seekers and the likes, which is equivalent to a full employment. That full employment is then, in a net delta change, is really coming from the fiscal boost, which continue to come in and which we expect will also come throughout the early parts of next year.
Christine, very quickly, what do you do with gold?
I'm long gold. I remain of the opinion that you need gold in the portfolio. It's a tail risk, but overall, you really need to be long volatility.
Long volatility into the winter or a little bit before? I also don't know exactly how you look at China, because every day there seems to be a crackdown. I don't know whether at some point we could see a policy mistake from China or too much crackdown that also takes the world economy down.
The Chinese authorities is in the political season. You have to remember by July next year, they have to have all of the appointments in place in order for the coming session of the Congress to re-elect President Xi. I think very much what's going on in China right now is a political game underneath what looks like a classic clampdown on the sort of the technology businesses and trying to replace this. So in the world right now, as I mentioned, we have two assets that is really worth being long. One is the green transformation and the government-sanctioned assets, in China and in the world. And on the opposite side of that sits markets and equities which have price discovery, which is really the mining sector and resources sector. So it's kind of ironic. You have to be both very long the government-sanctioned policy, and then you have to be going back to a good old market-based price discovery assets as well. Those two things remain, in my opinion, relatively cheap relative to expected policy changes. The rest of the market is extremely, extremely expensive.
Christine, thank you so much. As always, Christine Jacobson, their Chief Investment Officer at Saxo Bank. Now, coming up, markets are continuing to embrace the Fed's dovish taper tilt, and traders are awaiting key U.S. jobs Friday for further guidance on the economy's strength. We discuss that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now it's Tuesday, and if you look at the market, so we had another record high over in the U.S. U.S. futures, again, climbing today, buoyed by another record we saw yesterday. It's been guided by supportive Fed policy and rebound in corporate earnings. Of course, here in Europe, we're pausing a little bit for breath because of some disappointing data out of China. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The Taliban have called for good relations with the U.S. hours after the final American soldiers flew out of Afghanistan to end 20 years of war. Taliban leaders walked across the tarmac of the international airport in Kabul. It was the last place under U.S. control. Now, New Orleans has managed to escape the floods from Hurricane Ida, but it now faces days or weeks without power. And it's not just New Orleans. By Monday evening, more than 2 million people across the region still lacked electricity. Meanwhile, the system of floodgates and pumps installed after Hurricane Katrina devastated the city in 2005 passed their biggest test. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, after Jackson Hole last week, where Powell reiterated inflation is transitory and signaled tapering could begin before the end of the year. In an earlier interview, Rajan warned that the greater danger for the global economy is the Fed tightening too slowly, while investors will be looking ahead to Friday's jobs data for further clues about the strength of the U.S. economy. That's as the Delta variant continues to cloud global outlooks.
But there's one big difference post-pandemic, which is the enormous amount of fiscal spending. That wasn't there. My worry is if they don't fully account for these new forces, they may be behind the curve.
Well, joining us now is Christine Jacobson. He's Chief Financial or Chief Investment Officer, actually, at Saxo Bank. Christine, thank you so much for sticking around. We were talking about some of the policy mistakes and actually what we could see in terms of inflation. Where would the Fed pressure come from to actually tighten? Inflation? Is it jobs? So how important is just jobs report? Or is that actually also, you know, the Bank of England, like we saw the Bank of Korea, tightening before the Fed?
Very much the non-farm payroll number. It seems like that the Federal Reserve is data point by data point in terms of initiating the actual tapering. But I think what the market will ultimately focus on is the speed at which we're going to reduce this tapering. So you have an economy which is being, constantly given liquidity provision from the Federal Reserve, but all of a sudden it will be done and gone by the mid-year next year. And I think that the speed of the tapering is far more important, whether we start in October, November. But my fixed income analysts, they expect if we do see a strong number, slightly better than expected or expected, then we will probably see an announcement already for October. But I think the market consensus is November.
So, Christine, I know you like gold. Is there anything else that you would be buying into right now? I know you like, I think you'd be buying VIX.
I'm buying the VIX, the midterm VIX, not the front VIX, which have too much decay for a portfolio construction. So at all times, I want to have 5% in volatility in sort of the mid-size of the curve. And overall, I think, Francine, as we talked about briefly before, I think what is going on right now is that we are moving into reflation. You have to remember all of this infrastructure and green transformation talk that's been done so far has come without actually implementation. There's been very little permission in terms of expanding electricity grids, in terms of what goes on. So for me, I think this is the second wave in green transformation. I think we are sort of starting up the engine to start a very, very forceful enactment of moving from what is essentially both an ESG on green talk to something that is actionable in terms of investment and moving. So I would expect the coming budgets at a bare minimum to start the conversation about spending into these regions. And I think that will increase the pressure on the reflation trade as seen by the green and to some extent by the commodity side.
Steen, thank you so much. Christine Jacobson, their Chief Investment Officer at Saxo Bank, joining us today. Now, coming up, China broadens its crackdown to what it calls fake private equity firms at a time when the industry globally is booming. We speak next to Nikos Stathopoulos from BC Partners. This is Bloomberg. The U.S. ends its 20-year military presence in Afghanistan with its final flight out of Kabul early this morning, bringing a close to the country's longest war. China's recovery slows. Services slide in back-to-back months for the first time since February 2020. Beijing widens its crackdown to private equity firms. And EU travel curbs while the bloc recommends new restrictions on U.S. travelers in another blow to the tourism industry. But will individual nations choose to enforce them? Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has found its next target in its wide-ranging crackdown. That's private equity. Its securities regulator says it plans to rein in the sector, focusing especially on what it calls fake PE funds that are sold to the general public instead of targeting investors. Now, earlier this month, Beijing already halted private funds from raising money to invest in residential property developments. Well, joining us now is Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, exactly what does this mean, and what does it mean for who?
Well, it's the latest crackdown on the finance industry, Francine. We're still trying to nut out the details of it, but the basic gist of it is, as you mentioned, they're talking about banning what they term to be private equity funds that are being targeted at the general public rather than going to those specialist investors. There's also language around targeting these funds that are embezzling funds, for example. And the regulator in the speech made it clear that private equity should be all about promoting startups and innovation rather than going down the path that it has. Now, the private equity scene in China is pretty much dominated by Chinese houses. There isn't that much. There is some foreign investment in there, but it's pretty much dominated by Chinese names. So it's hard to know how this will spill over exactly. But you would have to just look at it in the broader picture. And the broader picture is this ongoing regulatory crackdown on so many sectors now, including finance. And that's why we're seeing private equity get caught up in that dragnet.
And who else? I know yesterday we were talking about, for example, medical expenses, possible house prices. I mean, what is there left for China to crack down on?
Well, certainly the language is getting more aggressive, and there's a sense of urgency now in these comments and speeches that we do get from Chinese regulators or from meetings, Francine, that they are now really pushing through a pretty broad policy agenda. And it stretches all the way from, as you mentioned at the start, this idea of pushing a more equal society, a more equal economy that's under the banner of common prosperity, right down through individual industries, right down to micro measures like the new ban on video gaming for children and teenagers, for example. So it's a pretty sweeping agenda that they have. And I think the question a lot of people are asking as they try to digest what it means is, can China pull off this big regulatory overhaul and keep the economy broadly on track and continue to attract foreign money at the same time? I think that's the big question that investors are asking. That's what everyone's going to be looking out for in the months ahead.
Enda, thank you so much. Our Bloomberg chief Asia economics correspondent, Enda Curran. Now, China's private equity crackdown comes as the industry globally is booming. PE firms are raising funds at the fastest pace ever as investors seek out alternative ways to make returns. Joining us now is Nikos Stathopoulos. He is managing partner at private equity firm BC Partners, a staple of the firm since 2005. He has more than 23 years experience in the industry. So Nikos, thank you so much as always for making time to speak to us. How has the private equity world actually changed in the last 23 years, and what's accelerated since the pandemic?
Good morning, Francine. I think it's certainly the industry has changed a lot in the last 23 years. I think it has more than tripled, frankly. The industry now is about a $4 trillion industry, where even in the last decade alone, you've seen the number of private equity firms really doubling. And this is not by accident. I think it's because our industry has a lot of structural advantages that cater for this. First of all, it's a lot of active ownership. We are active owners, we can affect change, we can influence outcomes, but also it's more patient capital, it's more long-term capital. And therefore that means we're not impacted by cycles, we don't need to do quarterly reporting. And it has grown substantially, so it has been able to evolve over the last 23 or 25 or 30 years that has been active.
But Nikos, I mean, I was looking at some of the figures, are absolutely incredible. Where do you see us in this M&A cycle? So I think more than $2.5 trillion were actually spent. Is that going to grow on M&A, or at some point does it actually breathe?
We think we've seen the volume of transactions actually increasing. I mean, 2020 was a relatively lower volume of deals because of the pandemic, but this has picked up substantially in 2021. And yes, there's a lot of dry powder in the industry at the moment, as you said, about $2 trillion or so, but also the volume is higher. So our industry has shown that roughly every single year, there's about 2 to 3 years of deployment of dry powder that it's out there. And I cannot see stopping. I was a bit surprised actually about the earlier comment of the crackdown in China and in an industry that has been growing and also supporting the economies across the world.
Does it mean that it's more difficult for you to do business in China?
It might be. I mean, our firm has not been doing business in China. We have a lot of investors, of course, from Asia and from China itself, but we have not been investing so much in China. It has been a lot of local private equity firms operating over there. But as I mentioned, the industry has been growing so fast that I think you've seen that phenomenon happening across the world.
Nikos, if you look at fundraising, I mean, some of the numbers again are absolutely staggering, despite despite the pandemic, which means that you probably have less, person-to-person meetings with fundraising scopes, but actually the money's still coming in. Again, is there a limit to that, or do you just continue seeing people wanting to be invested in private equity, maybe because of central banks?
We've seen the volume of investors coming into this asset class actually increasing. We've seen the number of funds, as I was mentioning, increasing. And this is because really the industry has shown consistently superior returns to other asset classes. And therefore, with so much liquidity out there in the market, people are willing to invest more in this asset class. I mean, private equity has proven to outperform effectively every other asset class. And it's not surprising that you see that growth. So I do not see that stopping, frankly. I think there's a long runway still for this asset class as long as we continue to perform and deliver these returns.
Has deal scouting and deal making changed because of the pandemic?
It has a bit, because we, as you correctly said, we have to adjust as well. We cannot have, or we couldn't, now I think things are changing, have these in-person meetings, so we cannot win the hearts and minds of the founders and the families and the management teams via Zoom. But I think this has not stopped really the deployment of capital. And now with markets opening up, with the vaccines, with life coming back a bit more to normal, we've seen this going back to the previous levels that we had back in 2019. So yes, we had to adjust ourselves. But frankly, I think we're back to normal, it seems.
Nikos, through a lot of our research, we basically found out that BC Partners was holding on to some of their portfolio companies maybe for a little longer instead of IPOing them. Is there a reason behind that? Like, what's the rationale?
Well, one of the downsides of the private equity model is actually the fact that, we have closed-end funds. So it means that at some point we need to sell what we invest in. And our industry, by being very creative, by being innovative, by evolving all the time, has figured out ways to hold on to certain assets where they feel there's still a lot of runway, there's still a lot of growth. And one way to do this is through holding them on a bit longer, either through buying them through a new fund or through what they call now continuation funds or single asset funds, or other ways that you can continue having exposure to basically your big winners where you think there's still a sustainable growth prospect. So yes, I think you will see us being a bit more creative as an industry because we need to evolve to address some sort of the downsides of the business model.
Are you worried about a market correction?
I'm aware that inflation is going to creep up, and of course this can have an impact. I'm worried that maybe interest rates might also slightly increase, and this could also have a negative impact, of course, on the financing, on the cost of financing, which is important in what we do. But I'm not really worried that much that we will have a substantial crash or a big correction. I mean, valuations, unfortunately, as a buyer, still remain very high. So it has made really our job of investing really more difficult over the years because you need to have that more conviction. You need to find that growth. But I'm not that worried about a substantial market correction at this stage.
Nikos, where do you find that growth, actually? If you look at the UK, it has relatively low multiples. Does it mean that you could go bargain hunting in the UK?
The UK has been one of the markets. We're not so much focused on geographies. We're looking at assets and we're looking at sectors. So, we've been trying to be very disciplined on the asset selection. And I think ultimately our job is to invest steadily through the cycle to identify these quality companies that have some long-term trends in the industries they operate. So we've been more focusing on sectors. And within these sectors, really sectors like healthcare, for example, or telecoms and media and technology or software, sectors where you've seen some recurring revenues, strong cash generation, subscription-based businesses where you can predict a bit more, have been industries where we have been focusing on, or industries where they've been disrupted through this pandemic. And we're taking the advantage of this disruption by trying to identify some opportunities. I think the UK may, on the face of it, sometimes feel a bit lower valuation. Ultimately, the risk reward is not just an absolute measure. The absolute valuation is not necessarily determining whether it's going to be a good investment. We need to look at the growth. The UK has gone through a slower pace. We do see opportunities in the UK. You see currently the battle for Morrison's, for example, in the supermarket space. I think this, depending on certain sectors, you will see more activity, I believe, in this country.
But do you believe, in general, listed companies just look a little bit expensive?
I believe they do. I believe they have been also in the last, frankly, 2-3 years. We could be having exactly the same conversation 2-3 years ago, and I would have probably made the same statement. So yes, they do feel a bit expensive. But ultimately, if they continue to grow and if the earnings of these businesses continue to grow, then probably they can justify these valuations.
Nikos, thank you so much for your time, as always. Nikos Stathopoulos, their managing partner at private equity firm BC Partners. Now, coming up, Merkel's CDU holds its economy day as their candidate struggles in the polls. We'll have a full roundup ahead of the German elections on September 26. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there's just a little bit of breaking news from Evergrande. This is, of course, one of the stories that we've been following very closely from the very beginning through its trials and tribulations. Evergrande now saying it has a risk of defaults on some of the borrowings. Now, the total borrowings we found out earlier today of 571 billion yuan versus 716 at the end of December. So they have been getting rid of some of these total borrowings. But again, the latest headline saying that they're still at risk of defaults on borrowings. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prosus has agreed to acquire Indian online payment service BillDesk for $4.7 billion, making its largest global acquisition to date in the Asian nation. India had a record of $6.3 billion of funding and deals for tech startups in the second quarter. Now, Zoom tumbled in late trade after its sales forecast fell short of some analyst estimates. That's raising concerns the company will struggle to maintain rapid revenue growth as workers in schools turn away from remote meetings. The California-based company says revenue will be just over $1 billion in the current period and $4 billion in the fiscal year. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, the top brass of Merkel's conservative bloc is holding their annual economic summit alongside some of Germany's key business leaders in Berlin today. The economy is traditionally a strong suit for the CDU, and this is an opportunity to put those credentials on display as they slide in the polls. Our Europe reporter, Maria Tadeo, is on the ground in Berlin with all of the details. Maria, so is Merkel's conservative bloc now able to convince 25 days from the election German voters with their credential on economic policies?
Well, Francine, that is what they're clinging onto. It's the economic credentials. The CDU says we have a proven track record. We are the party that works for the German middle class. We are the party that will support the German industry. The problem that they have going into this election, of course, is that they're running up against the finance minister, Olaf Scholz, who in many ways has taken credentials, has taken the credit for overseeing the German economy during the coronavirus crisis. He was also in charge of the furlough scheme, which worked very well for Germany. And he was also the man, if you remember, who went to the flooding sites just a few weeks ago and said, we are going to spend no matter what it takes to rebuild the areas affected. At the same time, Armin Laschet was caught giggling, joking, laughing around on that flooding site. And that is something that continues to haunt him. So it's a very difficult rival to run up against on the economy, because to some extent it's Olaf Scholz that embodies that economic management of Germany.
So, Maria, if we end up seeing a CDU-led coalition, what will that mean for German fiscal policy?
Well, Francine, what they say is that this is going to be your traditional center-right agenda for Germany, economic orthodoxy. When you look at the fiscal side, reducing the debt deficit, they insist the debt brake, which is something that is very emblematic of the CDU, will still feature highly on the agenda. And they don't want to take in new debt, new borrowing. The problem with that, of course, is that if you don't want to increase taxes like they say they won't do, you want to modernize the economy and invest, and you don't take new debt, well, that means that your only card is to be able to grow the economy very fast to make up for that gap. The other issue, and this is where it gets interesting too, on the polling, they say we don't want to take new debt because this would be bad for the future German generations. The problem is, Francine, when you look at polls, the young Germans actually say they are okay with spending if that means modernizing the economy and going greener.
Yeah, I mean, we were talking about this yesterday, Maria. I mean, the problem really is that if you're a voter, you just don't see Armin Laschet as a successor of Angela Merkel. You're seeing Olaf Scholz. So he has 25 days to try and turn that round.
Yes, and Francine, you make a very good point, because that is exactly what the SPD is doing. They don't focus so much on the SPD. They focus on Olaf Scholz, his persona, his credentials, and this idea that if you are looking for continuation when it comes to Angela Merkel, which many Germans still continue to support, and she has a very high approval rate, and it's Olaf Scholz that embodies that. This is someone who's already been in government, as someone who's in the sitting coalition and has a huge experience as a politician, not just on the federal level, but also in the roles that he served previously, especially in Hamburg.
Maria, thanks so much. Great reporting there from our Maria Tadeo on the ground. Now, coming up, more than 1 million homes and businesses remain without power in the aftermath of Hurricane Ida. We'll get the latest next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Hurricane Ida has caused catastrophic damage. 2 people have died as the storm continues to devastate the U.S. Gulf Coast. An estimated 200,000 people could face weeks without power. Investors are weighing the impact of the storm's damage to rigs and refineries on the oil market. Now, ahead of the OPEC Plus meeting tomorrow, oil is heading for its biggest monthly loss this year. The cartel is expected to restore more output. Well, joining us now is Bloomberg's executive editor for energy and commodities, Will Kennedy. Well, first of all, I guess it's not as bad as it could have been.
No, that appears to be right. As we can see now, the levee system around the city in New Orleans has held and there hasn't been widespread flooding inside the city. So it's not a repeat of Katrina. But as you say, the biggest immediate impact does seem to be on the power system, which has had a catastrophic failure. And people are going to be without power for many thousands of people. It seems are going to be without power for some weeks to come. But yes, in the round, it could have been a lot worse.
So, Will, what does it exactly mean for the price of oil? I mean, there's gasoline and the price of oil. Gasoline is going up, but oil, it's unclear exactly what it does because it's also impacted by OPEC Plus.
That's right. So if we look at the hurricane first, Ida, on oil, those platforms in the Gulf of Mexico which had closed, curtailing US production quite significantly, have started to reopen already as the storm moves inland. So we can see that there's not likely to be a long-term impact on oil production, hence that there's no big impact on oil prices this morning. On gasoline, on the other hand, we don't know how big the impact is going to be on the very big oil refineries on the Louisiana coast. There's disruption to the distribution network. So at the pump, American drivers are probably going to feel the impact for a little bit. They're going into this coming holiday weekend with the highest prices since 2014. So there will be a bit of impact on gasoline, but the impact on oil is wearing. When it comes to OPEC, we have an OPEC meeting tomorrow. I think it's going to likely to be slightly straightforward. They're expected to add a further 400,000 barrels a day into the market. The base expectation is that will happen. OPEC was very worried about the impact of the delta on demand in China, but those concerns have started to dissipate in recent days as the Chinese appear to have got those outbreaks more or less under control.
Well, how much do we, when can we understand actually the damage to refineries? So there's the offshore, which seem untouched. What about refineries?
Yeah, I mean, that will take a bit longer. I think as we get into the US day to day and people get back to the plants and they start turning them back on and reactivating them after the shutdowns for the refinery, they'll understand whether there's been widespread flooding or any of those units have been damaged. So that's a process that's likely to take a few days.
Well, thank you so much. Bloomberg's executive editor for energy and commodities, Will Kennedy. Now, this is what the market is looking at. First of all, it's a big week when it comes to data. Not only do we have Chinese data today that really disappointed the markets, but I would argue it's all about the U.S. jobs data later on Friday. Now, I'm looking at U.S. equity futures. They're still climbing. Remember, yesterday, we once again had a record high. Now, it's been guided by supportive Fed policy, but also rebounding corporate earnings. Treasuries extending gains made after Jay Powell had made measured comments on Friday. Global stocks really are set for a 7th monthly advance on strong company profits, expanding vaccination programs that are underpinning economic reopening and moderate monetary policy. The only downer is actually what we're seeing with some of the Chinese data that we'll talk about at length. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Lisa Abramovitz out of New York. This is Bloomberg.
There's still a lot of momentum in the economy, but we are seeing some headwinds from the Delta variant.
The real question mark, if you want, in this moment is more Asia than any other continent. The supply side is the one which worries me more.
It's a broader question that investors are asking themselves, whether and how to invest in China in the next, let's say, couple of years, where you could still have a surprise in terms of regulation at any time. And, well, the short answer is that investors have become a bit more cautious.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, August 31st. Our top stories today. China's economy takes a double hit from Delta. The latest coronavirus outbreak hurts both manufacturing and services. It's the end of America's long war. After 2 decades, the final U.S. military personnel leave Afghanistan. And Apple's space race, well, future iPhones will have satellite capabilities so you can send messages in areas without cellular service. I'm Francine Lacqua here in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Kailey Leinz is off today. Lisa, the markets. I mean, we saw another record on Wall Street yesterday, kind of filtering through here in Europe, but despite Asia taking pause for breath because of that not so encouraging Chinese data.
Well, that's where I wanted to pick up that PMI data that showed a real slowdown, particularly in services in China, actually showing a contraction for the first time since first quarter of 2020 when they first started to put in restrictions due to the pandemic. And you did see somewhat of a response, but it really shows how in China so much of the response has to do with the policy response. You can see the Shenzhen now barely down, just down about 0.2%. Earlier in the session, just to give you a sense, it was down as much as 1.5%. You're not seeing the same kind of read through over in Japan, despite some potential tempering in trade data over in Japan. You see the Kospi up nearly 2%, 1.75%, the Nikkei up 1.1%. If you take a look, though, at what's going on across the world, in the United States in particular, we are geared up, Francine, for our 54th record high for the S&P 500 this year, should it keep these gains that we see right now. We're at 45.35, up about 0.25% right now. And really, I just can't emphasize, it bleeds upwards. If it's a slow day, it means that you're going to just creep higher as the day continues. 10-year yield somewhat lower, and I wonder how much this is really propping things up. People kind of getting on board with Fed Chair Jay Powell, 1.275%. The dollar, a little bit of weakness, continuing that weakening trend that we've seen all week. This, though, to me, is probably the most interesting data point, Matt. I know it bleeds into some inflation data that you got right now. Aluminum rose about 2% to the highest in 10 years on the London Metals Exchange. So far, year to date, Matt, 40% gains for aluminum.
Wow, that's an incredible run up, but we've seen incredible runs up everywhere, as you point out. So many records. It'll be a record number of record highs this year. The second most record highs that we saw, Daniel Curtis, our New York producer, pointing out to me, 1995, we saw 51 record highs, but we're only in August. It's still August, right? It's not September yet, so it's pretty incredible. I wanted to show you the gains that we're seeing here in Europe very quickly as I give you the inflation data. We're looking at inflation now, 3%, just coming across the wire on the Bloomberg terminal. That's the highest since 2011, and the estimate was for 2.7%. So higher inflation than had been anticipated, and that does not slow down the gains we're seeing across Europe. You're seeing big gains, more than 1% in Portugal, but we're seeing 0.6% here in Germany, a little bit less in France and in Spain, and the UK is down. They had to play a little bit of catch-up today after a day off yesterday. Take a look also what we're seeing in terms of some of the other asset classes, most notably, I think, the euro and the pound, both gaining some ground against the dollar. Not as much in the UK, again, as we're seeing in Europe, but the euro right now up to 118.25, Francine, so making some pretty decent gains.
Yeah, decent gains. I have to say, for the inflation, first of all, you know, it could be a temporary increase because of the sales tax last year, as well as some early summer sales across the bloc. But it's supply bottlenecks that worry economists that could actually take hold and then push inflation higher for longer. Now, a look at what else is going on today. The top brass and Merkel's conservative bloc is holding their annual economic summit alongside some of Germany's key business leaders in Berlin. Joe Biden gives an address on Afghanistan a little bit later. We also have some U.S. data out. This includes the FHFA House Price Index, that's Chicago PMI, and the August Consumer Confidence Index. And then it's the start of Elizabeth Holmes' criminal trial. The Theranos founder is facing up to 20 years in prison on charges that the blood testing startup she created was actually a massive fraud. Now, over to China. The economy took a hit from the Delta virus outbreak this month. Bloomberg's Ritika Gupta joins us with the latest data. Ritika, it's clear the data was disappointing on all fronts.
Yeah, Francine, we certainly do have reasons to be bearish here because we're starting to see that Delta variant really starting to show up here in the data. We had quarantines coming back, travel restrictions, Also, supply side constraints. We had that Ningbo port being shut, so a lot of these feeding into the data. So you see the PMI for manufacturing, that's slowing to 50.1 from 50.4 in July, but it was really that services PMI that stands out here. We actually contracted for the first time since February of 2020. That was at the height of the pandemic, to 47.5 there. So a big concern here, but the question really is this just a short-term snag, or is this a long-term slowdown that we're starting to see?
Well, and what are some of the tools policymakers might use to try and turn it around, Ritika? Would they go as far, for example, as a rate cut?
Yeah, Matt, I mean, this certainly does give policymakers room to ease here. But as far as a traditional rate cut, that might be going just a little bit too far for them, because we know they have these new structural reforms that they want to put in place. They want to reduce inequality. They want to reduce household debt. That cutting interest rates might not necessarily support as much. But what they might do instead is boosting liquidity measures. So there's a lot of chatter about the cut in the reserve ratio for some of those lenders, and also more fiscal spending going into that second half of the year, Matt.
Bloomberg's Ritika Gupta, thank you so much for that update. Let's move over to Afghanistan. The United States officially ending its military presence in Afghanistan yesterday with the final flight out of Kabul, concluding 2 decades of American involvement. U.S. Secretary of State Antony Blinken spoke at a briefing yesterday about the future of U.S.-Afghanistan relations.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
Joining us now from Washington, D.C., Jack Fitzpatrick, Bloomberg government reporter. I know that President Biden, is going to speak today at 1:30 p.m. Eastern Time. Do we have any sense of what message he plans to send?
Well, when the president has spoken about Afghanistan, he has taken the broad view and typically justified the decision to pull out of Afghanistan, sometimes to the frustration of critics who says he hasn't really publicly discussed the details of the messy pullout in the short term. I think one thing to watch for that Secretary Blinken didn't really get into the specifics on, but that General Kenneth McKenzie raised yesterday, was that the number of American citizens who still have requested to leave Afghanistan is somewhere in the low hundreds. That's a low number compared to the fact that the U.S. has evacuated more than 120,000 people the last couple of weeks, but there are still some Americans left. So I would say that's probably one of the top questions that we're going to look to see if the president addresses what the U.S. is going to do with those people. But really, mostly the president has taken the broad view on pulling out from Afghanistan.
Jack, President Biden also vowed to support Louisiana and Mississippi with aid because of Hurricane Ida. What more can you tell us?
Not a lot right now on the details of how the federal government is going to get involved, just because we're still in the early stages. Some of what the federal government can do is sending generators to areas where the power is out, which still is, according to Entergy's map, just about the entire city of New Orleans. But we don't have a real damage estimate. And a lot of the time, what the federal government does to respond more in the long term to a hurricane that is really, really destructive is not only FEMA money and that initial push, but a longer term rebuilding effort. And right now, it doesn't appear that the federal government knows the exact extent of the damage, especially with so much power out. This is a bit of a long-term issue, and it could be a matter of weeks rather than days before everybody gets power back. So we're going to have to wait a little bit to see exactly what the federal government does in terms of more of a rebuilding process to the areas that got hit the hardest. But there are some initial measures that the federal government is doing, such as working with the electricity providers to try to get everything online as fast as possible.
Jack, thanks very much. Jack Fitzpatrick there of Bloomberg Government giving us the update on the Afghanistan situation and Hurricane, now Storm Ida. Let's get to tech. Apple plans to add satellite functions on future iPhones. The push will focus on emergency situations, allowing users to send texts to first responders in areas without coverage. Let's get more on this with Bloomberg's Matt Bloxham. Matt, I've had a GPS device that can do this for years, but Apple is now going to include it in a very small package. Are we going to get this on the next iPhone in October?
Well, it seems that way. I mean, we won't know for sure until they actually release the device, but certainly the rumours seem strong enough that that's likely to be a feature, and it could be a relatively modest upgrade to the existing chipset if they use the global style network, which works on typical cellular technology anyway. And as you said, potentially initially focus on emergency services, but over the longer term, it could be a more exciting feature to kind of work with some of their fitness and health functions. As you said, companies like Garmin already have this kind of product out there in the market, so it could be part of a roadmap that takes them in a number of different directions.
Is Apple going to become a space company? Are they going to try to send satellites up themselves so that they can just bypass the current infrastructure up there?
I mean, it's possible. I mean, historically, that there's plenty of opportunities for them to have built a mobile network on Earth, but they haven't chosen to do that. There are plenty of companies sending satellites up there. So I imagine for now, at least they will continue to focus on the hardware they're putting into people's hands rather than putting satellites up. But you never know. You can never rule anything out. They've certainly got the financial firepower to do that if they wanted to at some point in the future.
Yeah, they certainly do. I think that it was another record high yesterday. Matthew, thank you so much. Bloomberg's Matthew Bloxham. Now, coming up, Carsten Brzeski, ING Germany chief economist, and then a little bit later also on China, Diana Choyleva of Enodo Economics. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Now, European Union countries have voted to impose fresh restrictions on non-essential travel from the U.S. amid a surge in coronavirus cases. The curbs have been lifted or had been lifted in June. Governments of each member state now have the final say on accepting proof of vaccination to waive restrictions. Let's get straight to Sam Fazeli, our Bloomberg Intelligence senior pharmaceutical analyst who joins us. Sam, first of all, what's the rationale behind this? So if you have Delta in Europe, if you have Delta in the US, but actually you have critical vaccination, does it really warrant, curbing those travelers?
Honestly, Francine, and good morning to you all, I don't see this as a data-driven necessarily. I mean, there's one bit of data that worries me about the United States, and we can come back to that. I think this is much more political because, the Europeans enjoyed the tourism from the U.S. for a couple of months while they relaxed it, and now the U.S. has not reciprocated, so it doesn't really make much sense to keep that door open, especially when you don't have many more visitors coming for holidays. So it's easy to close it and say, look, go back and revisit, please, and either you let Europeans in or we just keep these borders closed.
Right. It should be pointed out, of course, that this is just a recommendation from the EU. Americans are still welcome to come here until individual countries make their decisions, and they may say you can come as long as you're fully vaccinated. So we still, and we don't even know when. It could be months until these decisions are made.
Yeah, exactly.
What is the science, what is the data about the U.S. that disturbs you right now, Sam?
Yeah, I think what I don't like, Matt, is looking at the positivity rate. When you have 14%, 15% of people who testing positive, as opposed to 4 or 5% in Europe, UK, or even lower, that tells you that there aren't enough tests being done, that in reality you might have a lot more infections than you think you do. And that is where you start worrying. So when you're already at a several hundred per 100,000 infections per day, and then you have such a high positivity rate, then that does worry you. And also, let's not forget, vaccinated people can carry the virus. But I don't think that, there's not that volume of people coming from the U.S. that's just going to make a massive difference to our case counts in Europe,
yeah,
right?
Sam, that's exactly where I was going to go. This idea that travel bans have not been that effective in the past. I mean, how do you sort of put travel bans in the perspective of the scientific rationale behind trying to prevent the spread?
Yeah, can I use a phrase here? I'm sorry. The best phrase that comes to my mind is that it's all rubbish, right? It's all political. Why is the UK? How is the UK's
day 2, day 5, day 8, pre-test, vaccinated, quarantines, red list, has done nothing. If you compare the UK with France, they have the same positivity rate, and the UK has got a higher rate of infections. So what has all this stuff actually achieved? Nothing, right? Now, you could, of course, say, Sam, you're looking in the rearview mirror. If we had not done that in the UK, we would have had much higher case rates. But I don't think that data really, that view bears out when you look at what's going on in France, which has had relatively open borders. So where is the problem?
Okay, Sam, I need to ask you about boosters, but I also want to ask you about variants. I mean, are we actually seeing new variants that could be dangerous where vaccinations could not work to fight them off?
The answer to that is a simple no, not yet, at least. I mean, this is science. Things change all the time. This is a virus. It changes all the time. There are always some variants that will be occurring here and there. So the data to date suggests that there's no new variant of concern to worry about. If it does come, it will be very quickly discovered, just like Delta was a few months ago.
So, Sam, in the meantime, we hear the CDC is down in Washington, D.C., discussing the potential for booster shots. We've heard 8 months after full vaccination to get that booster shot could bolster protection. What's the latest science on whether we'll all be getting booster shots in 8 months or even sooner?
Yeah, that's a complicated one, and I'm in the middle of writing up a note that uses quite a lot of the information that they provided last night on their CDC meeting. I think the principal issue here continues to be that there are some groups of people who do need a third shot. And I continue to believe, which is what was discussed last night too, that we don't necessarily know that the vaccines that we developed are genuinely two-dose vaccines. We did the trials that we did with 2 doses, with short intervals between the 2 doses. That's because that's what we needed to do, to get a quick answer. Do they work? And if they work, can we use them quickly? And the answer was yes, and they were safe. Now we are figuring out what we should have figured out in a much longer-winded development program as to whether these are 2-dose or 3-dose vaccines. And that's where we are. And I think that we will end up with people needing or taking at least a booster shot.
Sam, thank you so much. Bloomberg Intelligence's Sam Fazeli on COVID vaccinations and, of course, booster shots. A little bit later, we'll also speak with Dr. Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Now let's get straight to the Bloomberg. First word news, and the U.S. military presence in Afghanistan has ended after nearly 2 decades. The final flights carrying American troops left Kabul yesterday after an evacuation of more than 123,000 people. Some Americans who wanted to leave Afghanistan were not able to get to the airport in time for the military to fly them out. New Orleans managed to escape the floods from Hurricane Ida, but it now faces days or weeks without power. It's not just New Orleans. By Monday evening, more than 2 million people across the region still lacked electricity. Now, meanwhile, the system of levees, floodgates, and pumps installed after Hurricane Katrina devastated the city in 2005 passed their biggest test. In China, President Xi Jinping chaired a meeting in which he approved measures to fight monopolies, battle pollution, and shore up strategic reserves, all areas that are crucial to his government's push to improve the quality of life. Well, Xi and other top Chinese officials have been emphasizing the need for high-quality development. And Zoom is raising concerns that it will have problems keeping up its rapid revenue growth once workers return to the office. Now, the company gave a sales forecast that fell short of some analyst estimates. Zoom's video conference platform became an ubiquitous tool for work and school throughout the pandemic. I mean, I feel like I haven't met one person, Matt and Lisa, that's not Zoomed out at this point. So I don't know whether it comes back, but people want to have in-person conversations.
I think, though, that this is not just an issue of people's being Zoomed out. Look, everyone hates Zoom. That little delay in between a conversation, it's killer, right? But I think that there also is just so much competition, and now people have a chance to ramp up and do comparisons. I mean, Matt, do you hear about Zooming or do you hear about something else?
I don't. I mean, I haven't used Zoom. I've only used Zoom like 3 or 4 times throughout the entire pandemic. I use FaceTime quite a lot, and I use our own internal Nexi. I don't know who makes Nexi, but I use the Nexi system a lot, and I love it.
Okay,
I don't have a problem with
Matt's
that.
in a bubble, basically, Francine. That's what we just learned.
Yeah, I mean, I definitely have used, like 3 times, maybe an hour Zoom over the last 18 months. How many times have we said, "You are muted, please unmute"? Actually, I heard about a kindergarten, child being given top marks because she knew how to unmute her
Can I just say, with remote school, the kids have all learned how to fake out their teachers to basically replicate internet disruptions and things so that they can bow out of class. It's become a thing.
I know. I mean, they're all into coding now, thanks to all of this. Coming up next, we talk about the economy with Carsten Brzeski from ING Germany. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Kailey Leinz is off today. Now, Matt, if you look at the other record, yet another record on the U.S. equities, actually it's filtering through to Europe. Data from China a little bit worrying, but actually it seems that equities are brushing it off today.
Yeah, equities seem to be doing quite well. I mean, not in London. You had the day off yesterday. You didn't have the day off, but the FTSE was closed for trading, and now it's playing a little bit of catch up to the downside for some reason. But we have gains that continue to get better and better. In Germany, now up 0.7%, more than 100 points on the DAX to almost 16,000. So yeah, it's a year of record highs for equity indexes, and the question is, when does that turn around?
The million, trillion, gazillion dollar question.
Maybe it never has to. Maybe it never has to. If you look at a long-term chart of the S&P 500, it's happened. It's gone up forever. So,
Forever. I would argue that at some point it does have to, but today's not the day, Lisa.
That incredible technical analysis. You see it going up. It just keeps going up. Let's take a look, though, what you are seeing today. It keeps going up. We have seen a lift to markets and a potential for a 54th record high for the S&P 500 should some of the gains continue. We're seeing the S&P up 0.2% to 45.35. Interesting to me, the 10-year yield actually was lower earlier in the day. Now has creeped a little bit higher, but still 1.28%. It is incredibly low. And it seems like there is a certain degree of complacency in the market right now that, yes, the Fed is going to taper, and no, it won't matter to bond yields. And how much is this providing a support to the overall market for risk assets? And crude actually a bit lower following on some of the losses that we saw yesterday. This comes ahead, Matt, of the OPEC Plus meeting that we're going to have tomorrow. And we're expecting perhaps some cuts in production. How much will the price that we've seen recently filter into that decision, Matt?
All right, so we'll definitely continue to keep an eye on that, especially considering the storm and what happened, what didn't happen there. The effect of that on commodities could have been greater. Now, here in Germany, the top brass of Angela Merkel's conservative bloc is holding its annual economic summit alongside some of Germany's key business leaders in the capital, in Berlin. The economy is traditionally a strong suit for the CDU, and this is an opportunity to put those credentials on display as they slide in the polls. Bloomberg's Maria Tadeo joins us on the ground with some reporting. So, Maria, what does it look like?
Well, Matt, here they're really trying to cling on to this idea that this is the CDU. We have the credentials. This is a party that works for the middle class. It's a party that will support Made in Germany. But if you look behind the scenes, there is a sense that this may not be enough this time around, and particularly for one fundamental reason. They're competing against the finance minister, essentially. That is Olaf Scholz, and he is the man that over the past year has been overseeing the stimulus for coronavirus. He was also the man that put in place the furlough scheme in Germany. And also just a few weeks ago, he went to the flooding site, which was such a traumatic event for Germans. And he said, we're going to rebuild everything that was destroyed, no matter the cost. At the same time, in the same region, Armin Laschet was caught on camera giggling, joking around. That's continued to haunt him. So they're competing against a tough rival on that. And that is still being cementing in the polls. We had another one yesterday by Bild that's putting the SPD now firmly in the lead. This is not about a tight race, but now a firm lead of 5 points over the CDU. It's their worst result in INSA poll, by the way.
I mean, the million-dollar question, Maria, is, of course, what is Olaf Scholz doing right now? Or maybe what is the CDU doing wrong that they can maybe get back on track on this economy day?
Well, you know, when you look at Olaf Scholz, the one thing that's becoming very obvious now in the campaign is that he is presenting himself as the man that has the credentials and it's the man that will offer that continuity from Angela Merkel. Angela Merkel's approval rating is still very high. Germans are also used to her 16 years, and he says, if we want to continue on that track, it will be me. I'm the candidate that's actually the succession, to some extent, to Angela Merkel. So they're still kind of playing up that big card. The CDU, however, they continue to say, and this is something that we've been hearing today, is that fear factor about an SPD kind of left to the left coalition. That is a card that they will play going forward, saying when you vote for Olaf Scholz, you're voting for what could be a very left to the left coalition. By the way, the SPD says that's an exaggeration. They haven't ruled anything out, but this is something that the CDU keeps repeating. You don't vote for the person. You're voting for a party and potentially a coalition that is much to the left than Germany has seen in the past few decades.
Yeah, that better be their mantra right now, especially with Armin Laschet running. Maria Tadeo, thanks very much for joining us. Let's get to Carsten Brzeski right now, chief economist for Germany at ING, joining me in the studio. So obviously the CDU wants you to vote for the party, not the person, since they have this candidate. And Olaf Scholz is painting himself as a successor to Angela Merkel, since Germans like her well enough. She's done okay, and he's done okay, right?
Yeah, remember that Angela Merkel, I think 4 or 8 years, went into the campaign saying, you know, why should you vote me? Because you know me. And this is
We're familiar with each other.
This is the same slogan that Olaf Scholz could use right now. And while Merkel always put her CDU much more in the political center, and kind of overruled or made this right-wing conservative part actually forgotten, Olaf Scholz now does the same to the SPD, namely he makes the left wing totally forgotten and says, here I am.
Now, it's a good point, but then there's this concern that popped up in the debate for most Germans that he would be willing to make a coalition with the former Communist Party. Is that a real possibility?
I think, when you're honest, it's probably the only possibility that Scholz has realistically to form a coalition. And, you know, because everything is possible, that's the disclaimer. But I don't see the CDU joining any SPD-led coalition. I also find it hard to see the Liberals, which might be needed for Scholz to form a coalition without the CDU, also to join a coalition.
So he can't make a coalition with the CDU, he can't make a coalition with the FDP.
So then what's left?
And you're saying the only thing left is, well, the Greens, obviously, and Die Linke, the former communists.
Yeah, so it still depends. You know, let the Greens win a few votes, and maybe it could be enough to just form a two-party coalition. But in the constellation of three parties, probably the only really realistic option for him to come in as chancellor might be a left-wing coalition.
Right. So, Carsten, first of all, how stable is the SPD lead? And if he does have to have a coalition with the far left, what does the economy look like?
Well, how stable? This is very, very hard to tell because all these polls are very often internet-based polls. When you look at, you know, who are the voters of CDU, also of SPD, it is very often the elderly people, and I don't know whether this is really fully captured by the internet polls. That is one thing. And clearly, the lead of Olaf Scholz right now is his personal lead. It is not necessarily the SPD's lead. What I think is interesting that we will see more and more people going for early votes, for mail votes, and this is already happening. 4 years ago, we had actually 30% going for mail votes. This time we will have 40 or 50%. So therefore, this lead could be a kind of self-enforcing lead. So therefore, it could be stable. But in the end, these margins are still error margins, and almost everything between at least the three parties is possible.
So it seems that actually everything's at play at the moment. Can you talk us through, you know, the worst case scenario for the markets and for the economy and the best case scenario?
Well, I guess the worst case scenario for the market the morning after election day will be that we don't know anything. that so many things are possible, and that we will then just look into a very uncertain future of all kind of different negotiations. Probably from a market point of view, a very left-wing oriented coalition, so which would be the SPD together with the Greens and the left-wing party, could be seen as the worst outcome for financial markets, as it means higher taxes, probably also means less fast structural change of the economy. The best thing for Germany from a market perspective would be the CDU and the Greens together, either with the SPD and the Liberals, because this would be a coalition which would bring about more investment, more structural change, without going to the extremes.
Carsten, it's fascinating to be having this discussion right after getting a German inflation read that was the highest since 2008. We just got Eurozone inflation coming in at the highest since 2011. I'm old enough to remember when Germany actually cared about inflation. How is this playing into the election?
Well, I'm old enough as well, I'm afraid. It is not playing into the election. So we only saw with the last Sunday's discussion that actually this campaign moved towards content and context. Before that was all about personalities. The content discussion so far was not about prices or inflation. And we had, I think, the most interesting thing is, will the candidates give an answer to whether or not this fight against climate change will lead to higher prices, to higher costs or not? Until now, they all refuse that it will bring higher costs and hence also higher inflation.
Carsten, thank you so much. I feel, without talking about age, even like 15-year-olds in Germany get reminded when it happened that they had a lot of inflation. Carsten Brzeski, their chief economist at ING. Now, coming up next, we speak with Diana Choyleva, Enodo chief economist. That's on inflation. That, of course, is also on foreign policy. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Kailey Leinz, the Zoom Video Communications Chief Financial Officer. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London. China's economy took a knock from the Delta virus outbreak this month. The services industry shrank for the first time since February last year. And manufacturing was hit by supply chain problems. But beyond the virus outbreak, China's economic recovery is also showing signs of faltering in the wake of recent regulatory crackdowns. Joining us to talk about this is Diana Choyleva, chief economist of Enodo Economics, an independent macroeconomic and political forecasting company that focuses on China, one of our China experts we go to on these issues. Diana, yesterday's announcement on video games, they don't want teens playing video games more than 3 hours a week or more than 1 hour a day, Friday, Saturday, and Sunday, struck me as kind of a dangerous thing for the Communist Party to do. Aren't they making an enemy out of an entire generation?
Well, in Xi's China, the path ahead is clear, and the spiritual opium, if you use their terminology, of video gaming is not part of it. I think investors have to be clear about the fact that there has been a sea change in China's growth model and how she is going to run the economy. It's all about redistribution of income and achieving socialism with Chinese characteristics for a new era. It is not about getting rich is glorious, quite the opposite. And that puts investors in a very difficult position.
All right, well then, what could be the next shoe to drop, Diana?
Well, this is the problem. What could be the next shoe? It's very difficult to predict. I would say there is one clear-cut answer, and that's housing. She has been maintaining that housing is for living in, not for speculation, but understand by speculation long-term investment in the case of the Chinese, because they have very few options where to achieve growth, long-term security and growth of their wealth. and housing is where the majority of their wealth is stored. And of course, that creates social problems because as house prices increase, and in China it's all about capital growth, not rental income, then of course that puts even a bigger wedge between the poor and the rich. So the Chinese have not really been paying too much attention to that mantra, which has been going on for at least 3 years. All of this that is happening right now is not new. The time was a bit difficult to pinpoint, but housing, I'd say, is next.
But it seems, Diana, and good morning, you know, the Chinese president at the moment is cracking down on everything. So maybe it's not so surprising to China watchers over the last 5-6 years, but it could come as a surprise to a lot of investors. Is there a danger that they overcurb, that they over-regulate, and actually it pulls the Chinese economy significantly lower?
Well, first of all, it's important to say that for the Chinese Communist Party, what foreign investors think and what foreign capital would do is last on the list. Internal security, stability, and by that understand both from the perspective of national security, but as well the Communist Party keeping its hold on power, that trumps everything else. And what's going on right now, it's a lot more about that. It's about addressing you know, if you think about it, China as a socialist economy is one of the most unequal economies in the world. It doesn't sit well with what the Communist Party sees as the way things should be. And they're prepared to take the risk of achieving a short-term hit to growth as they see it, at the, you know, hoping that they will give to the vast majority of the population what they want. I would argue, though, that this could turn out to be a very significant headwind for growth over the long term. But at the moment, they're keen to progress down this route.
But Diana, so this is basically anti-capitalistic crackdowns. Is it? I mean, if we characterize it like that, what does it mean for the U.S.? What does it mean for U.S. businesses in China?
Well, first of all, you have to understand that this also comes in the context of this all-important great power competition between the Chinese and the US. And those are two competing ideologies, both in terms of economics and politics. The Chinese have always been on the route of decoupling themselves. They just coupled with the world in order to catch up, to achieve the growth that opening up helped them to. Now it's the opposite direction. They're closing up, trying to produce everything internally. And life has become very difficult for US companies, especially in areas of significance to national security, already for the past 5 years. And it will get worse. I mean, essentially, it is either with the US sphere of influence or with China's sphere of influence. It will be very difficult to straddle both.
All right, interesting to see that it has to be one or the other. Diana, thank you so much. Diana Choyleva there, Chief Economist at Enodo Economics. Now, tonight on Bloomberg, gold, crypto, and much more. Billionaire John Paulson shares his investing insights on Bloomberg Wealth with David Rubenstein. That's at 9 p.m. in New York, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin. Now, we're also joined by Tom Keane, co-anchor of Bloomberg Surveillance, who will dazzle us, Tom, good morning, with a wonderful chart.
Yeah, I don't know what housing's like in Berlin or London, but I know what housing's like in America, Francine, and there's basically a true frenzy. Doesn't matter which geography you look at. Case-Shiller is a delayed series. We're looking back here. We see Case-Shiller this week, and we're looking back not 1 month, 2 months, but we're looking back a good number of months, and it's a stunning chart. We are extended out from the frenzy of 2006. We all love and remember that. And far more, the path from the pandemic of up 3-4% per year growth in housing prices is now ballooned out to 16%. You just wonder, you know, trees to the sky, Matt Miller, you wonder where this goes.
Yeah, absolutely. And to me, the most fascinating thing is we see prices soaring. Everybody, it seems, wants to buy a house, but there's not much inventory out there. And yet, when we talk to people about mortgages, when we talk to people about credit levels, it seems like it's very different than what we saw in 06 and 07. And the main difference may be that investors are really coming in to buy single-family homes to rent out.
Yeah, there's a geography thing here, and Blackstone's made a big splash for that. I would go to the Dallas Fed. Robert Kaplan talking to Michael McKee a few days ago, and Dallas is really looking within their research at this. And their key question, Francine, is does the price of a house roll over to an assumption of increased rents? And the answer, it does. If you get higher house prices, rents follow along, up, up, up.
Yeah, not always, actually. And this was one of the great things about the pandemic, Tom, that if you look at some of the houses here in the UK, rent did not follow because people chose to either buy or stay away because rent was still too expensive. So you saw that the price of houses in the UK actually rise and the price of rents fall. Yeah. I know it's a little bit quirky, and again, we're in pandemic era.
Yeah, and I'm looking here at the Bloomberg terminal. Matt, I logged on today. I got on. It's amazing. And, you know, I look here at real estate up, and guess what? Equity's up again today after what we saw yesterday. Just extraordinary.
Yeah, equities continue to rise.
Always record. Tom Keene, co-anchor of Bloomberg Surveillance. Matt, what are you watching for the rest of the day?
I'm actually watching Apple. I'm pretty excited about the latest from Mark Gurman. He's our Apple whiz kid out of the San Francisco office. And he broke some news that Apple may be looking to put satellite texting capabilities into the new iPhone. I say it's about time. I've had a Garmin InReach Mini for years that I use when I'm off the grid and I might need to text with satellite capability. It'll be good to leave that thing at home and just bring my iPhone with me. The only thing is, apparently this may be only for emergency use, and I think it's pretty cool to have satellite texting features for anytime use. But looking forward to seeing what the new phone brings.
I mean, it could come. I know there's many rumors also of them possibly buying. They have the cash of possibly buying other things that could make that possible. Matt, this is what I'm watching. So it's Hurricane Ida. Now, we know that it's actually less violent than we thought it could be, but we look at oil and gas producers, refineries that fuel the U.S., and they're trying to now assess the impact on operations after the passage of Hurricane Ida. Now, if you look at the major, the list of the major oil and gas production sites that were shut and their capacity in barrels per day and how quickly they can reopen, it seems that the offshore things are actually quite easy to assess. When you look at the refineries, it could take a lot longer, Matt, which is why we're seeing gasoline prices go up.
Yeah, absolutely. It's now Storm Ida, right? Because it's no longer hurricane strength. You can see that there's still a lot of human tragedy and devastation in the area. But to your point earlier, Francine, it's not nearly as bad as Katrina had been. And it's interesting to me also to watch the Biden administration take a very careful approach in making it clear that they're going to do what they can for the people there after Bush was burned so badly post-Katrina.
Yeah, I know we'll have updates from our Jack Fitzpatrick in D.C. Now, more Bloomberg surveillance is ahead. We'll hear from John Bolton, former U.S. national advisor to President Trump, amongst others. This is Bloomberg.